Today I'm gonna be just showing you guys my weekly or my weekend forecast for the upcoming week. Okay. In simple terms, what I'm basically expecting or anticipating from the next upcoming market, next week's market and price. In simple terms, right? Basically, in simple terms, my bias for the next upcoming week. Two weeks per se, but yeah. Personally, before I begin with any symbol, rather features of Forex, I begin with USDX or DXY, which is the US dollar index. It's heavily correlated with Forex and features. Forex features or pretty much any symbol that has the USD, or in simple terms, is battling against the USD, right? So, for example, gold USD, it's heavily gonna be influenced by this price right here or this chart, if that makes any sense. Yeah. So, looking at the charts right now, I'm on the weekly time frame. This is pretty much where I begin when marking out my analysis, right? And the first thing I identified, actually saw this last week, was this insufficiency here, this busy buy-side imbalance, sell-side insufficient, fair value gap. Price didn't really quite hit it and managed to just touch it by a few pips or less and then moved bullish, but pretty much what I believe supported this weekly move impulse bullish was pretty much the violation of sell side right here. And when you look down into like a smaller time frame, which is let's go to the daily time frame. We had SMT divergence, which is when two correlated pairs when we compare two correlated pairs, one violates buy side. In simple terms, one violates buy side or sell side. In this case, violates sell side, and the other one fails to. In other words, it reverses before it was able to fail, before it was able to violate it. So on the daily time frame, if you pay attention on USDX, we have this low right here, which was, let me just zoom in a bit, which was almost hit, but price didn't. With this candlestick, price nearly hit it, but it failed to. If that makes any sense, let me just make this like this just for it to be a bit clear. And I was able to identify this SMT divergence utilizing Euro USD, right? So if you pay attention to Euro USD, we have this move right here, meaning the price violated this previous day highs, and the dollar index failed to. So that's pretty much what an SMT divergence is, and it's basically one of those high probability setups or profiles within price that indicates high probability reversals, if that makes any sense, right? So right now, looking at USDX, right? I'm gonna be going from USDX to Euro USD and then GBP USD. There's an insufficiency right here. We got this gap right here on the daily, which I'm actually looking to see how price reacts within this gap right here. So we could potentially use this as some form of a level to potentially target the lows and insufficiencies going down, right? So as soon as we hit this point and we have a clear indication the price is potentially moving bearish, right? I'll be looking to see this BZ right here, this fair value gap right here, as my first strong liquidity, and then this gap right here, and then pretty much sell side, right? And then price revisiting this weekly fair value gap, if that makes any sense, right? Pretty much right now, I'm actually looking at two levels, right? We've got this gap right here, and we've got this auto block, I'll just say. But I'm regarding this whole range, I'm utilizing the whole range based on the weekly time frame. I just refined it. That makes any sense. I'm treating this whole range right here as an auto block, right? And then this low right here, this low right here as a breaker. So scaling down into the daily time frame, I'm expecting price to stay within this range right here, right? And I'm using this auto block right here because it was the last down candle before this impulsive move bullish, right? And then this was our propulsion block moving bullish, change of character right here, going down bearish. So I'm not expecting price for me to have a fixed bearish bias on USDX and a bullish one on Forex. I'm not expecting price to fill this fair value gap right here, because as soon as we identify breakers, right? Personally, I don't expect price to revisit this fair value gap right here, in simple terms. So yeah, overall, we're just gonna see how price reacts within these two key zones right here. We'll be considering this level right here, but I'm not gonna be looking to take any trades here. If I do, I'll be actually reducing in risk, bearish. But yeah, now going into your USD, right? It's pretty much the same thing as the dollar index if I am to invert the charts. With dollar index, we had a fair value gap right here, and then with your USD, we have a gap right here. Liquidity void in full, where price tends to use gaps as forms of support or resistance, and we regard price drawing to these gaps, right? And it needs to have two stages of delivery. In other words, price needs to drop within this gap right here, moving bearish, and then push back up, moving bullish at a later time. And this is then regarded as a full balanced price range, if that makes any sense. So I'm pretty much utilizing this gap right here, same way I'd be using this fair value gap within this zone right here. Let me just invert the chart to reduce all complications right here. Basically, I'm utilizing them the same way, if that makes any sense, right? We had violations of highs right here, just didn't mark it out to keep our charts clean. And price, one thing I can tell you, and I believe ICT provides this information, said this in full terms, right? We look heavily to see how price will react in the high, low, and midpoint, the CE 50% level of gaps, because price is very likely to react within these zones. In other words, we treat these zones as basically support and resistance, you know? It's more complicated than that, but that's just a simple introduction to how we utilize gaps. And when we divide them in half, it's pretty much the same as premium and discount. This is the discount zone, this is the premium zone. The anything above the 50% level of our gap is regarded as a premium, and anything below is regarded as our discount. So the highest probability shorts within this gap range would be within the premium side, which is this level right here, this level right here. Going into the daily time frame, also still looking to see how price reacts within this range right here. Personally, right now I'm actually waiting to see how price actually reacts to this level. So within your USD, right, I'm considering this this 1 week gap low here to see how price will react within this zone right here, because this right here, this high right here on the weekly, I'm also treating this as a breaker, right? As a bullish breaker to see price continue moving bullish, because if you pay attention, we've got more insufficiencies within this price range right here. Looking to see how price may react here, you know? That's pretty much the cleanest one I can see within this zone right here. So overall, my bias will be bullish, and if I'm taking any shorts, it's pretty much gonna be reduced risk, if that makes any sense, right? So right now I'm just paying attention to see how price reacts within this key zone right here, this 1 week gap low, this breaker right here, and going into the daily time frame, this daily breaker right here mixed with this range right here. This is actually a daily breaker block, so I'm expecting price to pretty much respect this zone right here. So I'm going to be looking to take trades pretty much within the breaker range. First point of interest would be this 50 gap right here. So as soon as price reaches this level right here, I'm going to be looking to see if there are any forms of indications that price may continue moving bullish. Let me just mark these things out with squares, you know. Yeah, so overall, with Euro USD and the DXY, DXY, I'm expecting price to pretty much, my overall bias would be short, and with Euro USD, I'm looking to see how price reacts within these key zones right here, right? Because usually when we have a impulsive price swing like this, right, price tends to move less clean like this to fill up this balance range, right? So with this breaker right here, I'm not expecting price to fully fill this whole range. So pretty much any forms of catching sells in this case will be probably way harder than actually waiting to see bullish price swings, if that makes any sense, right? Now going into GBP USD, also gonna begin in the weekly time frame, right? First thing I'm able to see right here, right, is this weekly gap right here, and this is pretty much a very high probability draw on liquidity, right? And I'm treating this proportion block, this order block, as confirmation of forms of support to carry price higher, right? So sticking with the fact that we're bullish on Euro USD and GBP USD, and then bearish on DXY, right? I'm not expecting price on the weekly time frame to close anywhere below the 50% of this range right here. And this two zones right here are the zones I'm looking to support price moving bullish, right? And I'm identifying that on the daily time frame with this inverted fair value gap right here, which also for me behaves as support to move bullish, right? My first key level in which I'm looking to see how price behaves will be this implied fair value gap right here. And an implied fair value gap is pretty much the same as a normal fair value gap. The only difference is that the wicks violate each other, they pierce through each other, but they do not close below the the close of this candlestick, right? So we divide this candlestick in half to get the equilibrium, right? And this one right here to get the 50% point, right? And then that gap right there is pretty much our range. So I'm looking to see how price reacts within this zone right here and this zone right here. Bearing in mind, this is pretty much my bias for the week. So I'm not gonna be expecting this to be happening within a 1 day impulsive move. So yeah, I hope everybody found this video useful, helpful, and hope everybody's safe, eh?